Hello, it's Mr. Intermarket Analysis. I've not done a video for a few days now, so given the crazy price action today, a lot of people are asking me to try and elaborate on the FTSE 100, especially given the price action today. Yes, one hell of a move, and some crazy, volatile, irrational, illogical price action. Again, that always happens. Remember, folks, there's endogenous variables and there's exogenous variables when it comes to trading. Endogenous variables are those that are within the system, the ones that we can attempt to react and preempt to a certain level, especially with intermarket analysis. But then there's exogenous variable events. They're beyond our control, and that's why we have stop losses in place to protect us, so that we can obviously objectively, as opposed to subjectively, reassess, reanalyze, and then obviously rethink our trading decision based on whether we think the market is going to go long or short. So today was an exogenous variable day, or an anomaly. Basically, as traders, generally speaking, we tend to get these days on, say for example, an NFP day, which is a Friday. Obviously that's a big day. Obviously that's tomorrow as well, so that'll be a big day tomorrow with regards to the jobs data and what the Fed will do going forward, etc. So yeah, I mean, the last year or so we've had a hell of a lot of exogenous variable events, whether it be the Syrian situation, whether it be the US debt ceiling debacle and shenanigans there, and obviously now we've got Mr. Draghi now, who's come on board with this rate cut, which a lot of analysts out there didn't expect. I mean, the people I tend to follow are Michael Hewson, Kathy Lien, even Ashraf Laidi, and a lot of these individuals are very good analysts, and not one of them expected a rate cut. So given the fact that the ECB is a conservative bank and generally tends to send out SOS signals, or tends to give direction well in advance, as opposed to Mr. Bernanke, who's very spontaneous and he likes to shock and awe the market. So it's interesting. I mean, mainly I think it's because of the rift that's going on between Europe and US, but let's not go into that. Let's just take objective. Let's look at it from a different perspective, and let's just take it out each step at a time. So basically, what happened today? Obviously, on the FTSE 100, we've been moving higher. We've been making higher highs. We had a topping tail on the daily chart. Okay, on the weekly chart, we already know with regards to the resistance there, double top. Everybody's been talking about. Okay, double top and you drop, as they always say. With regards to the daily chart, we obviously were pushing higher. We were still holding above on a daily chart cash close, regardless of what happened in the futures market overnight, where the FTSE is low as 6,650, probably lower. Basically, I mean, I've had a few long. I had a long on FTSE, and my stop loss just about was saved. My stop loss is at 6,638, with the FTSE long looking to go higher, looking around the 6,700 level and above, around the 6,720 level. Obviously, given the fact that we're now currently 6,657 bid, 63 bid on my CMC Markets platform, obviously it's not looking good with regards to my long trade. But anyway, that's certainly a trade that I have open at present. Okay, I've got a position on the DAX long. I managed to get a long on the DAX around the 9,003 level. I have a FTSE, I have a CAC swing long, which is pretty underwater at the moment. I got stopped out on the Nasdaq, but I re-entered around the 3,320 region. So interesting times. I mean, I'm currently sat, I think, just around 130 points. I was at 250 or 260 points this morning when I started trading, and now I'm down to 130, around 130, 120 points for the week so far. So as you can see, I mean, I'm negative for the day today, so I did get stopped out a lot of trades, which subscribers know because they have access to my entry and exit and stop loss. So it was a tricky day today, very tricky, but again, it's a learning curve. Every day is a learning curve. What do we do as traders? We remain calm. We keep good money management, good risk management. We always adhere to our stop losses. If we're wrong, we're wrong. And we reanalyze. And majority of the times you could even be right, but yet you're wrong, and that's because of the market, the way how irrational it is and how illogical it is. So allow me to explain, and I'll go into it in depth. Okay, so basically, in the morning. Okay, so basically, let's just go back to the FTSE again. So on the daily, larger time frames, as we all know, market broken out. Therefore, the scenario was potentially bullish to a certain degree. But given the fact that the Asian markets were lower overnight, the bias was definitely down. Given the fact a lot of people did not expect, remember, a lot of people did not expect Mr. Draghi to cut rates, okay, and that's well-respected analysts. The fact that he doesn't cut rates, that obviously puts pressure on the market itself, and then obviously we go down. Especially given the fact that the US markets were down overnight, and obviously the Asian markets were down overnight as well. Okay, so let's go to our smaller time frames, and this is a trade that I took in the morning, and I got stopped out on. Okay, so FTSE 100 10-minute chart, we had a nice downward sloping trend line. The market had been obedient here, held double top the day before. We had a bearish, we gap down, we closed the gap immediately. Okay, we closed the gap immediately. We were bearish consolidation, and I was looking for a nice H&S formation for it to go down and move lower based on the fact that Mr. Draghi was not going to cut interest rates. Obviously that will exert downward pressure, given the fact that the economic data out of Germany was pretty poor as well, and the Asian markets were down overnight. They were buying the rubbish. Okay. Excuse me, I'm tired. I've been up since 6 o'clock. Well, not 6 o'clock today. I woke up late. I was up at 8 o'clock today, half 8. So day trading isn't easy, folks. It requires a lot of hard work, 15-16 hours a day minimum. Okay, so back to analysing the charts. Okay, so left shoulder here, head, right shoulder. I expected this move to occur prior to Mr. Draghi, etc., etc. A lot of individuals obviously had the inside info. That's why you had this spike here. So all dirty insider trading. They obviously got the news leaked beforehand, etc., etc. They front run the markets, because obviously that peak here started to occur at around 11:50 time. So these individuals obviously had access to the information, insider trading, created short squeezes, so on and so forth. We went as high as 6,780. So I had a trade around here, a stop loss around 6,772. which obviously got triggered, and I was stopped out there for -40, and this H&S was negated. We broke out this trend line here, and obviously we're going to the moon. Okay, so whenever a H&S formation breaks, you have a powerful short squeeze in the markets moving the opposite direction. So okay, so once that occurred, I said okay, I respected that, because on the 60-minute chart you've had a neckline here forming. We tried, we couldn't break here. We had another short squeeze. We tried again, we couldn't break here. We had a short squeeze. So obviously I had the short position based on the fact that the H&S formation will play out, and we look to obviously close this gap down here, probably hit the 200 MA, etc., etc. Okay, ever since this purple trend line broke, the markets failed to regain it, and obviously the market's been trying to move lower. Okay, so especially given the fact that you had a contracting wedge pattern here, obviously once you break out the wedge pattern and you fail to fail to kickstart the H&S, or the H&S fails to move on the downside, especially given the fact that you've got a Eurozone rate cut of a quarter basis points. Okay, so that obviously is going to spur economic growth, help economic growth, etc., etc. So hence the reason why you had a bullish engulfing candle. Failure of the H&S play out, given the fact that you've got a rate cut as well, which is going to, and obviously the BOE held rates and held QE as well. Given that fact, then therefore you expect a bull flag to play out, and for the markets to continue short squeezing higher to around the 6,820 level, and that's exactly what I expected. So obviously then I changed my bias, given the fact that you had a rate cut that obviously helps economic growth, revives and supports the banks, etc., etc., and the market moves higher. But unfortunately that wasn't the case. The markets obviously had other ideas, especially given the Twitter IPO as well. Given the euphoria surrounding that, I expected the Nasdaq to continue short squeezing higher, and obviously take the whole market with it, given the fact that you had a rate cut in Europe. That obviously increases their disposable income. They purchase more gadgets, and obviously the Nasdaq will benefit. Okay, so again that didn't materialize. So as a trader, what do? You say, okay, you know, we got whipsawed there. It was a fake out. The market reversed in the opposite direction, and obviously that's exactly what that's exactly what happened. So it was a tricky one, given the fact that you've had this contracting wedge breakout based on a fundamental catalyst which is powerful. The market short squeezes higher, and you continue to make a high up to 6,820. Okay, especially given that its pairs are moving higher as well. So if I go over to the German DAX now, and I'll give you an insight into the German DAX. So if we go to the daily chart of the DAX, you can clearly see on the German DAX, the daily chart, we initially paced higher to the 9,200 level. So the fact that the German DAX had been holding this upper channel resistance and broken out, therefore the DAX breaks out, the rest of the European pairs follow, therefore they break out as well. So that's exactly the premise that I was expecting the markets to be higher on, especially given the fact that the weekly chart there is pointing to 9,300, 9,400, given the expanding wedge pattern. Okay, so again, signalling higher move, given the fact that you've had a rate cut, that's a fundamental catalyst, that'll spur growth, etc., etc., and the markets will break. Now, same pattern here, we had a H&S formation, we broke lower, then we negated the H&S because we regained the neckline, therefore the H&S was no longer valid. Okay, so a failed H&S pattern equals what? A short squeeze. Okay, so that's exactly what I was looking to expect on the DAX, given the fact that we had a bear flag formation here. Okay, given the fact that we had economic data that was weak out of the Eurozone, out of Germany, sorry, in terms of industrial production was pretty weak. So I expected this move to go down, at least go down to gap fill. And as you can see, we had a short squeeze higher, give people front running the market. They already had access to information, and obviously create a short squeeze and a powerful reversal. So interesting times. So I mean, that's the trade that I was playing here, this level here, looking for a bearish consolidation pattern and obviously going lower to close the gap. Unfortunately, we couldn't even do that. The fact that we short squeezed higher, we broke higher. This stopped me out, by the way. I had a short trade here, stopped out for minus 40, and then obviously the market reversed on the downside as well, and eventually stopped me out after hours on that as well. So, and then I had to get my third trade in around the 9,000 level. So this is a very, very tricky market. Anybody who's trying to trade this, good luck to them. Okay, you have to be, I mean, unless you have access to inside information, it's impossible. How on earth you trade this successfully, given, especially on a gate? I mean, I'm not referring to any other day, I'm referring to today. It's impossible. How on earth you trade today's data based on just based on fundamental analysis and technical analysis is beyond me. Okay, because I love for someone to show me how. Yeah, okay, on a day like this, all we can do as traders is pick the optimal entries, optimal exits, optimal setups, which, to be honest with you, again, were perfect in the morning, given the fact that the Asian markets were down. Therefore, the bias is down. Weak economic data out of Germany as well. Then again, bias down. Vodafone was under trouble. It was in trouble today with regards to its 3G offering. Morrison's data was economically, in terms of forecasting, weakness with regards to the consumer. And yet, the FTSE and DAX short squeezed higher. Okay, it's just one of those days. Okay, it's one of those whipsaw days. You have to respect it. Okay, for what it is. Okay. And just move on. Okay, just like an anomaly. So it's one bad day, doesn't matter. Okay, there's 350, obviously 56 days in a year, etc., etc., 52 weeks in a year, and it's irrelevant. We keep going as traders. Okay, so that's the most important thing. So on here as well, I mean, this is the fact that we've broken out. I organised a swing long based on the breakout, and yet it reversed, and it's currently sitting around the 9,000 level. So unbelievable move, unbelievable move. And on the daily chart now, you've got a potential topping tail in the DAX. So that, again, is going to be a tricky one. How do we interpret that information? So given the fact that you had a topping tail based on the day that you have a rate cut, it's really, concerning. Now, having said that, the counter argument out there based on these analysts, state that the reason why there was initially there was a euphoric reaction, then there was a negative reaction, is number one, there was an official out of the European Central Bank, not Central Bank, well, I think Bundesbank, a German bank, or one of the officials, I can't remember who now, who said that he was against the idea of a rate cut. Okay, so that obviously created a lot of confusion with regards to policy and uncertainty, etc., and that obviously exacerbated the sell-off as well. Adding the fact that you've got these individuals here now with regards to these analysts stating that the banks failed to offer a new round of cheap 3-year loans known as LTRO, fuel concerns about banks in the periphery, and stronger than expected US GDP data, curbed monetary stimulus, etc. So obviously we've got economic data coming out of the US tomorrow. If that's stronger than expected, then obviously you've got no more QE. Okay, so the Kool-Aid and the QE junkies obviously wanting to jump ship before. Now again, that's circumspect as well. It's a worrying factor from my perspective, given the fact that the The reason why the US market sold off so hard, again, they're more than likely to have inside information. They must have the economic data release that's coming out tomorrow being stronger than expected, therefore no stimulus, so they all wanted to jump ship today. Okay, same thing with Mr. Draghi's speech. 5-10 minutes before, half an hour before, the market was spiking higher. Why? They had access to the information, the big boys. Okay, so they made their money, and then obviously they slammed the market afterwards. Okay, so, and especially the fact that the Nasdaq was slammed on the day that the Twitter had an IPO, and all the rumours and etc. You had everybody, all the retailers buying the top. It was shady, very, very shady from my perspective. But as traders, we live and learn. Okay, so today's obviously example was a learning example. Makes us wiser, makes us stronger, and we must maintain patience and keep sticking with our trading strategy and trading plan. Never deviate. One bad day doesn't change anything, folks. If you have a strategy that nails you in excess of 200 points a week, never deviate from it. Okay, regardless of what the market does. Okay, if you constantly change with the market, then your plan is not waterproof, and it's not a trading strategy, because what you're doing is you're constantly changing the goalposts and the parameters based on what the market wants to do, what the market is thinking, and the market's irrational, illogical moves. Okay, remember, days like this don't occur every day. The majority of days are calm, collective, very technically and fundamentally obedient, especially in terms of intermarket analysis. So therefore, one should always stick with your strategy that works in the long run and ignore the noise, for example, days like today. Okay, so anyway, fantastic. It's still a good week so far. I mean, 100 points so far. So hopefully what tomorrow is going to be another wild, wacky day. Okay, a lot of irrational, illogical positioning, etc. So stay sharp, and always remember, risk on, risk off, wax on, wax off. Goodbye now.